All right, so I wanted to make this video because a few of my comrades, a few of my friends were saying, hey, I'm having trouble drawing these areas on the chart, areas of supply and demand. And yeah, I don't think I've ever explained like how I draw these areas. I just like kind of do it. And there's some subjectivity involved in it. So I'm just going to go through a bunch of examples, and that's all this video is going to be. Is just kind of like your eye training guide for drawing supply and demand. So we can start from, I'll start from this area on the chart here and just work my way to the right. And yeah, maybe I'll explain something that'll help. So immediately here on the left side, we have price comes up and makes this inside bar pattern. Oh, let me actually zoom in so that you can see I'm looking over there on the other screen and it's not looking good. Okay. So price comes up over here and makes this bullish engulfing with this inside bar pattern. Now, when I see this here, what I do is I usually take the wick of the candle, of the opposite color candle, to the top wick. Sometimes I'll do the body. It just depends, and this is where the subjectivity comes in. It just depends on how accurate you want to be with it, right? Sometimes what'll happen is if price leaves behind a gap here, it'll just fill the gap and go to the wick. But other times it will go deeper into the body, and that's where your multi-time frame analysis comes in. So whether you do the wick on the bottom here or the body, this would be your zone of supply, or your resistance, or whatever you want to call it, right? So that's one. If you were doing the bullish area of demand here, if you're just doing the area of demand here, you could take the wick here to the bottom wick and do it like this, or you could take the body right here, and this is, we're targeting the same bullish engulfing candle, which engulfs this. So this red candle would be like the base candle, and you would just kind of select this here, and that would be your bullish candle, your demand candle. Okay, now let's look at easier ones. So we can see this giant ass engulfing candle here. And then this white candle is our base. This is the last up move before the down move, right? And so usually with these, we'll take the bottom wick, and then I take it to the top of the opposite candle's wick, or whatever is higher. So usually it'll be the bearish candle that's higher, and we just take it to the top there. Once again, you can also take it to the body right here. So whether it's here or here, you're right. Okay. Moving down, we do see that we have this area here. So this is another one of those inside bar patterns where you can, with these ones where it's like bearish, bullish, bearish, what I'll do is I'll usually just take the entire length of the white candle like this, and then I'll do that. Or in, like, if I was doing that in here, see this part where it's basically a hot dog. So you got the hot dog, so you could just take that right here, or if you wanted to, you could take the length of the opposite candles. It's up to you. I like to do the middle candle for these because usually that is kind of where price will come to. So we have this guy here, which we'll mark out, and that would be our area once it breaks below of supply. And then moving on, bearish engulfing with this bullish candle. That is our inside bar area of demand here. So taking it from the body of the white candle to the bottom of the wick. Basically the high of the body and the low of the candle. Like I am sure that you understand what I'm saying when I draw this here. But you can also take the inner wick too, when that's just basically the high and the low of that time period or candle. Right? And then you would just drag it out, and that would be your area of demand. Now we go to here. So we have this bearish engulfing. This is a clean one. bearish engulfing, we have the base candle here. Now this one, you could take the body and draw it all the way across. Once again, if you wanted to do the wick, you could do that too. But look at this. So with this area here, you see it'll tap you in the trade here and make a bearish engulfing. Now you might get a nice trade on the 1 minute scalping this here. We don't know without going down a time frame. But if you took the body, you wouldn't have that fake out. You would only have this area here, which is about the same size, but you don't get that bearish engulfing. You know that there's a lot of momentum going into it at that time, and you get an indecision candle. This will probably be like a big spike down and a big spike back up on the 1 minute, back down in 2. What do you know? Some of these zones of demand down here. So since we're working left to right, though, we ain't there yet. This might be a really long video if I'm just going to do this all the way. So here's another one of those hot dog patterns. Once again, you could take the middle candle. And with these, if you can either do the wick again or the body. But I usually do the high of it. Now, one thing to note, because of the way this formed, right? Notice how we have this bearish candle and then this inside bar, right? And then it forms this hot dog type of thing, okay? What I would do here is I would actually take the wick that comes lowest. So I would take, since this candle here came lowest, I would actually just take this inside bar and use that as my base. And then because this wick is not much lower, I'd just take that to the low of the area. The reason for that is because if price were to come down here, a lot of times it'll come down to the lowest point before going up, or it'll just, of course, let's just run the wick because there's a bunch of resting orders in here. That's the liquidity if you watch my other videos. So that's kind of how I would draw these. I'd probably just do it like this because it's a whole area. What supply and demand is basically just a cluster of orders where people are buying and selling a lot, and when it comes back in there, that's basically the person with a lot of money that wants to collect the his profits, her profits, their profits at that area. And so they know that all these orders are back and forth there. They need to come tap into it, grab some of those orders, and then continue going with the market. Okay, so here we go. We have another bullish one right here. We have the base candle. We're taking it this time. We're taking it from the body to the lowest wick, and that would be our demand zone, right? And of course, this would be a supply zone here. And by now, I'm hoping that you kind of understand how I'm drawing these out. But like I said, you can take the wick, you can take the body. It just depends on what works best for you. I guess if you want a hard and fast rule, you can say if the candle left behind some missing price, then take it to the wick. But if it's just like a regular thing like this, then take the body. So, for instance, here we could take the body because this wick and this wick filled in any missing price there would have been, right? And also this wick, there was just no missing price ever there. However, when you have this type of candle here, right? Well, you can probably take the wick here because you can see there's a little gap in there. It's very small, but it is there, right? So between this candle here and the top of this candle here, there is a little gap there. So there's missing price left behind. And I don't think I follow that. I mean, if you watch some of my backtesting videos, I just kind of draw these kind of however the wind's blowing at the time. But, you know, just keep in mind, like, areas of missing price are pretty powerful. So you just kind of have to play around and see what you like. So now, right here, we have this inside bar pattern, right? So this little candle here, that could be our area of supply or demand. But the thing is, when we have this type of candle here in the middle, I would probably just take this whole area like this, because when price comes back down, a lot of times it'll kind of, let's see, if you think of this as a basin of water, right? And price just wants to fill in the water. So it's just going flowing down into there, right? imagine this as the bottom of that basin, right? And you kind of have a reservoir in here, but just imagine price doing that. You're just trying to basically fill in missing price as much as you can. There will still be some in here, but this is the opposite color candle. And basically once price comes here, there's a chance that it'll just bounce from the opposite color candle. I know I didn't explain that right, but that's how I think about it. So we're kind of going in there. We did miss a few up in here. I wanted to get to more significant areas of supply and demand. But you could have also marked this one out here. I mean, from the bottom of the white body to the top of the wick there. Or if you wanted to get fun, you could just do that body to body. And of course, I think we already did this one. This is my problem with going out of order and starting to explain other things. But see, you can draw it from the wick here to the top of this wick. The point of this, though, is, well, taking the inner wick when you're drawing these is subjective. Taking the low is not. So if you're looking for buys and you're at an area of demand, you want to take the wick at the lowest point or the wick at the highest point if you're looking for sells. And the reason for that is because when price comes back up in here, a lot of times it can go to these wicks and then reject. If it doesn't break this high, then it rejected. It's out. It's going back down. Okay, just like this. Oh, actually, it's right here. I don't know why I'm struggling explaining this. It's right here. Look. So we took this body here to this wick, and we came back in, and we came right into this wick, and then we rejected. Okay, so that's what I'm talking about. So you want to take the high or the low of the area versus just the top, just the body on the bottom, if that makes sense. Okay, so I would call this area right here an area of demand, because we have our engulfing candle and our base candle. There's areas of supply and demand in here, but honestly, when you're looking at this, like something like this could be kind of confusing to look at. So what you can do here is just kind of look at the edges of price, and you can draw something like this, and if it gets stabbed, if the high breaks, then you just take the next area. And by edges of price, I mean like swing points. So notice how we're going down here, up to here, and then back down again, and then up to here, then back down again, then up again, and then down, up, down. So just take the areas at the edges of price. You'll be a lot happier for it when you're trying to read this stuff, or else you're going to get very confused. Okay. And you can just see like the clearest points of entry in this choppy zone were literally like from this area here, this area here, and this area here, right? If you just took those areas of supply for sells, then you would be doing pretty great. Okay. So we'll keep going. We'll get out of this choppy area. So with this type of candle, we do have this body to this wick, and if we draw it all the way across, you would get your entry there. You could take this here, another one of those hot dog type patterns, and then you could enter on either of those, but it's very, this time frame is 15 minutes, so it'd have to be a very small trade. And if you were looking for buys in this area, what you can do, if you really want to look for buys here, because this last push up was a bullish, so you'd want to look for buys. You'd go across here and look for buys there. But anyways, back to my point. What you can do, where you have two down candles and then a bunch of candles engulfing it of the opposite color, you could take both of them right here, and that could be your area of demand. And this could be for up candles as well, just be the reverse. But basically on a higher time frame, what this is it is one of like these candles right here. And let me illustrate my point. I've got bar replay. I don't know why I'm not using it, so let's try this out here. So I go to 30-minute, might compress, and there you go. Look, you've got your zone of demand right here. So, price is fractal. It, like anything on one time frame, is something else on a smaller time frame, and it's about what's seeing the clearest picture for you. So when you see an engulfing pattern like this with opposite candles and it makes like this V or U shape, or I guess this is a backwards candy cane, basically you can just go to a higher time frame and compress your candles together and be like, oh, that makes more sense now. And you can even see this getting better, right? This choppy area here. Look, now it's just a bunch of this stuff. Like, you need in one trade in there. But I go to the 4 hour. Oh, look, now here's your area of supply right there. And maybe you could have taken a trade. So if we go back down to the, wrong one, 15-minute. Maybe this would be your trade here for this overall area of 4-hour supply, right? So it's just about constructing and deconstructing the candles at that point. In any case, we go back to my choppiness. And we'll just do a few more and then I'll wrap it up. It's almost 20 minutes. So when you're looking for cells, I mean, you're just drawing stuff on the top. So we got this base candle here to the edge of this wick here, and that would be looking for cells. But if you were looking for buys, then what I would suggest is to wait for a structure point to break to the top side. So wait for this here. And then now we have this engulfing candle. So we have from this body to this wick. And of course, price taps into it like a million times, but you get the point. That's your area to buy from, right? So, I mean, that's another point I could probably bring up in this video. I mean, when you have price kind of curving like this, you could just wait for the middle point to break, or here, right? And then you can enter your trade. But that's not the point of this video. The point of this video is just to point out supply and demand so you can draw it on the chart without like being confused. And so you have one here, right? And you can see this would get run because now we're at the point where the order flow is switching. So, just make sure that you combine this with market structure and all those concepts, and just make sure you understand what's going on. When you have an area like this where it's pretty choppy too, the other thing you can do is just take the whole thing. Like if you don't want to do the flipping through time frames to find something clear, you could just draw everything around like the whole thing. But look, if you just do the 1 hour time frame, that's pretty clear versus what we were just looking at on the 15-minute. This zone of chop here. Yeah, that's kind of how you draw supply and demand zones, or how I draw supply and demand zones. I don't know, I hope it helps clear some things up about my backtest videos, and maybe makes it easier to follow along with. So we got that here, we got this one here. Once you start seeing this, it'll be a lot easier. There's only hot dogs inside bars and bullish and engulfing candles, so it's not like super crazy. It's just eye training. Now I'm just going crazy, marking out everything I see. That kind of makes sense. Right? I mean, yeah, I could put shapes all over the chart all day, but hopefully this helps. If it hasn't, just let me know, and I'll try to explain it a little better. Yeah. Thanks for watching, and yeah, let me know what you think.